Absolutely. Well, good. Is it afternoon?
Yes.
Good day. Good day, everyone. We are so pleased to be here again and see so many new faces as well as some of the ones we met last time. Shania said it in a nutshell. We're out here promoting the power of the home-based business and making sure that each and every one of you know the truth about what you can claim, know the truth about what's due to you because you're a home-based business owner. So we are going to we're going to roll right into it. I think Shania gives us a great introduction. We're here from Dallas, as she said. We've been in business, having our own business for over 7 years now. And he has some history before that as well, just learning and growing in the tax industry. So we, again, want everyone in here to know that this is the strategy that we use for our own family. Not just as business owners, but we use it to lower our tax liability. So I'm going to just let Mr. Rodney take it over. I'm going to have a seat, and I hope everybody learned something from this presentation. You
ready? Well, I know we all coming from, we just saw a great presentation from Shania. We all getting back, and you know, my thing is keeping the business. You know, I really stress the business side of any business. And so I think it's important that we discuss, and what I like to do, I do a little brainstorm just to get us ready, just to get us in the business mindset. And I think it's very important. So I'd like to start out asking a question, if you don't mind me asking. Well, in your opinion, what's the difference between the rich, the poor, and the middle class?
Rich make all the money. Everyday middle class gets screwed the most, I think.
What makes the difference, though? What's the difference between them? What's the difference? Why do the rich? I want to know that difference.
Why do the rich? Because they know how to get past all the tax. You know, they have all the tax breaks and things like that. They're able to claim more and buy this. But you got to have money to make money. That's what I was.
Please.
The wealthy have businesses, the middle class and poor work jobs.
That's the first time I heard that. Your opinion. The difference, yes, please. There's no wrong answer.
Well, the rich, they keep what they earn. The middle class pay what they make. And the poor has nothing to give.
Wow.
That's a great answer. That's great, and you know nobody's wrong. You know, I want to just share mine. You know what the poor do? They just buy stuff, just like you're saying. They buy stuff and they buy stuff. Nothing ever comes in. And so, you know, you saw a guy the other day, case in point, you know, those LeBron James tennis shoes are $350. And you know, that's 2 companies on his feet. And it just, he doesn't realize it. It's like you said, what you know. And what do the middle class do? They purchase liabilities and assume that they're assets.
Yes.
You know, they buy the new car, the new house, creating a mountain of debt. And never knowing that you're just passing on debt through generation to generation. But what do the rich do, just like you said? They purchase assets, but not just any particular kind. They purchase an asset that's going to pay back. An asset that earns. And see, it's 3 words I want to share with you. You see, it's passive income, residual income, and cash flow. I think that's very important. And see, passive income is nothing more than income being taxed at the lowest rate. That's what passive income is. And cash flow is money coming in and going out of your company. And in my opinion, residual income is just money made without an effort. That's what residual income is. Now, I want to just share with you that I'm aware that vocabulary won't make you rich. But I think it was Robert Kiyosaki that said a lack of financial knowledge is worse than being broke. And I think it's very important that we understand what the information does so we'll know better. And there's 2 things you do in this country. You either play it safe or you don't play it all. And how many of us are secured in our jobs right now? And see, that's what we understand. You don't place your security where there's amongst the unsecure. So jobs are not secure nowadays. And so we would like to share this information. And then we just want to go through, and I just want us to just kind of get our minds wrapped into the business of business. And I want to go right into this. First, I want to give a company disclaimer. Truth Induced is not associated with any company, nor was Truth Induced endorsed, paid, or compensated any financial income to share the information within this presentation. Truth Induced does not guarantee any income. shown in this presentation, nor does Truth Induced participate in the projections of income with the intent to entice, persuade, or manipulate any individual toward a decision. Just want to make that clear. But I want to start out by asking some of my guests. You don't mind me, sir. Shanaza picked on you, so I got to pick on you too. What's the greatest expense that you'll think you'll ever incur in your entire lifetime? A lot of people don't think about that.
Being debt free and being able to do things.
No, I want something that you spend on, and an expense that you spending on. That's gonna be the greatest one in your entire lifetime since you've been on this earth. Your house? That's a good answer. Share with me.
My education.
Education, please. Kids. And I always get those. You know, we always get those three answers. Home, children, education. I'm not a psychic. I'm not clairvoyant. I just want to show people how the mind is, how everyone thinks when it comes to finances. But I want to ask you a question. How old were you when you purchased your first home? You see how 30 years passed before you picked up that expense. You see, how old when you start paying for your own education? Look how many years passed before you even picked up that expense. And my wife told me don't ask, but when you had, when you had your children, years passed before you had your babies. And so that was not an expense until years. Well, can I share with you the one expense that before you were born you had? And even when you die, you'll be paying taxes on you. And see, this is our lifetime liability, to lower our tax liability. This is what our goal is in life. And so when I share this information with people, I want you to understand this is the greatest expense that you'll ever incur, taxes. And so your goal and your lifetime liability is to lower it. But I want to share a few tax quotes. A tax is a compulsory payment for which no specific benefit is received. This is the U.S. Treasury. This is their opinion. So if they feel this way, why shouldn't you feel that way? Here's one of my good ones I like to make people aware. The truth is that we have such a limited budget, such limited manpower to enforce the income tax laws and collect the revenue, that the only way we can keep them honest in paying their taxes is to keep them afraid. And them is you. You see, this is the commissioner, the former commissioner of the IRS. He just quit. And he says, what? We have to keep you afraid in order to keep you paying your taxes. And that's what my goal is. This is my favorite. You get a raise every time you can legitimately avoid paying a tax on something. And see, that's a beautiful quote when you look at it. You see, legitimately is the word I want everybody to focus on. You see, legally, these things are legal for us if we just know better. And see, that's very important. So what is this power, Rodney? What is this power of the home-based business that you keep speaking of? And what I want to do is ask some of my guests. You don't mind me asking, if you look at this list of expenses, how many of those are you currently incurring? Yes, ma'am.
Insurance, health.
Car, fees, meals, utilities, some of those. Now here's that magic question I ask. How many are you writing off on your taxes?
We can't hear her.
You see, a lot of people are not aware. And that's what I want. If you're in the room today, look at this list. How many are you currently incurring? And then I ask that magic question. How many are you writing off on your taxes? And see, there are other deductions that come along with it. And that's the goal. You see, that's my goal today. That's mine and my wife's goal. We go across the country, literally, passing this message, teaching people how to convert their everyday living expenses to tax-deductible write-offs legally. And it's very important that I stress legal because this is law. This is not a tax scam or a tax loop that I'm up here teaching. This is not a get-over scheme. This is actual tax law and tax code that you're entitled to as home-based business owners. And you are legally entitled to them, but you just don't know. And see, that's what our mission is. This is what we do. That's what Truth Induced stands for. We're going to force it on you, even if you don't know. We're going to force this truth into your mind. And so the first thing I want to do is talk about a couple of what I call the big lies. And that is the red flag versus the audit. You see, these are two terms that a lot of people just aren't aware of. And there are stigmas attached that make you act a certain way. So I want to define them. What is a red flag? A red flag is no more than a tax deduction or a tax credit that bounces your return out of the computer and invites an IRS auditor. Just that simple. That's all a red flag. But in order to receive a red flag, you have to violate one of these 4 rules. One of these 4. You see, you hear your tax professional say all the time, hey, that's going to raise red flags. Let's not do that. That might raise red flags. And then, if you look at the 4 reasons, expensive credits not associated with your business. Items of lavish or extravagant nature for personal or recreational use. Large deductions out of line with the amount of income you're reporting. An abusive use of deductions or credits associated with your business. If you're not doing one of those violations, then it's not going to raise a red flag. And so Rodney will be the first person to let you know, in the tax world, if you hear a tax professional say red flag, it's code for I don't know how to do those taxes. And see, that's when you hear a person say, it's going to raise red flags. The best question to ask is, show me how, in black and white. Because see, this is not our opinion. This is nothing we're guessing. It's all in black and white, what we can and cannot do. So there's no such thing as a red flag without documentation to show me. Show me why I can't, and then I'll believe you. And so if you hear that red flag, usually it means we don't know how to do those taxes. And so it's very important that you do that. Audit. What is an audit? An audit is no more than the IRS looking to prove that the information on the return is accurate, the deduction is legal, and that the income is honestly stated. This is what an audit is. Is that a bad thing? Does that sound bad?
It doesn't sound bad. But
It doesn't sound bad. But see, the stigma stuck on you right now. All you think is, oh, it is bad. But in definition, it doesn't sound bad. It's really not bad. But see, guess what? The IRS is aware, too, that there's a stigma on this word. So you know what they did? They changed it. They no longer conduct audits. Now the procedure is called conducting examinations. So if you receive a letter saying we're going to conduct an examination, you're being audited. And a lot of people just not aware. This is new information that they're doing because of the stigma. But what I want you to give you some numbers of business owners who were audited recently. If you made under $25,000, there's a 1.2% chance that you'll be audited. And just to give you the round numbers of the numbers that we're dealing with, we're talking about 80 million business owners in America. Of 80 million, there's a 1.2% chance that you'll be audited, home-based business owners. If you happen to make over $200,000 or more, there's a 3.3% chance that you'll be audited. Their audit is very low numbers, ladies and gentlemen. I want you to understand there are very low numbers to be audited. And so audit is not a bad thing. And this is what I concluded and I came up with. Unless what? Unless you're lying.
Yes.
You see, and that's what Rodney stresses. There's no reason to lie when you're already incurring these expenses anyway. You see, everyone drove here today. You already spent gas. You already drove miles. But how many of those get to write them off on their taxes? And see, that's what we're here to teach you. As long as you don't lie, please don't be afraid of an audit. We invite an audit because we have proper documentation. You see, documentation is key. You see, they don't want to talk to me or you. They just want to see the receipts in the documentation. And so we make sure we provide that. But what makes this power work? I think it's very important that people understand taxable income is what makes it work. How many of us in here currently have a job? Now, see, this is the secret in your income that you cannot unlock. And see, a lot of tax professionals, if you're sitting here and this information I'm saying to you is new, then your tax professional is behind. You see, as tax professionals, we have 2 duties. That's to get you a bigger refund or at least put you in position for one. And that means we have to grow with information. And this should not be new information to you. And this is why I always share this information. This is the secret to your income. This is what unlocks your ability to increase your refund. Let's say you make $40,000. This is your AGI. This is how much you make for the year. Let's say you make $40,000. What's going to happen is you qualify for 2 deductions. Automatically, you're not going to be taxed on the entire $40,000. If you do not itemize, they will give you a standard deduction of $5,800. And if you're just claiming yourself as an individual exemption, you get $3,700 per person. That means $9,500 will be taken off of the income that's being taxed. And the great thing about it, that leaves us $30,500. Now, as a tax professional, it's my job to get this to 0. As that number goes to 0, it increases your refund. And so we always tell people the more taxable income you have, the greater your opportunity to increase your refund. But here's the key about this. This is what the tax professionals don't understand. In the IRS code, it says your expenses cannot exceed your taxable income. You see, if you own a business and you say, hey, I took off losses, I spent a lot of money on my business, it can't exceed that $30,500. If we put $30,500 in one, we're going to invite an examination. Exactly. We're going to have an examination. But as long as we take it to zero, ladies and gentlemen, you can, legally by law, if you have those expenses and documentation. And I think it's important that you understand that. Now let's go over what credits and deductions actually do for you. You see, a lot of people go in and they sit down and they say, hey, you're getting a nice refund. And they say, hey, I'm just happy. As long as the refund good, I'm happy. I don't care what happened. But I want to teach you what actually makes up that refund. I want to show you how it works. What is a deduction? It's an expense associated with your business that qualifies for the deduction. In formula, it's your income minus that deduction. And I want to make it clear. Let's say you make $40,000 and you're in the 15% bracket. What this means is you roughly owe the IRS $6,000. This is what you owe for earning $40,000. That's what, like Shanaza said, if you have a job, you're actually paying for that job. Any money you make with that job, you have to pay. So if you receive a $1,000 deduction, I know everyone in here has spent over $1,000 in gas for the year. So that qualifies you for all of your gas is tax deductible. Well, let's say you only spend up to $1,000 in gas, and we're going to write off the gas. What this does in essence is we'll take the $1,000 away from the $40,000, and what'll happen is you'll have a new AGI of $39,000, and what they'll do is tax that bracket now. And this is how you lower your liabilities. Now you're down $150 for $1,000. Now remember that $30,000. If I take all $30,000 from your $40,000, your liability will not only go to zero, it'll go to the green, to the black. And now you'll start to receive. But if you're already receiving, ladies and gentlemen, this adds to your refund. And so when we say, hey, a $200 purchase, $300 purchase can literally add $5,000 to your refund, we mean that. And before I go any further, it's very important. Sometimes, you know, I would say that and people will be like, well, Rodney, you know, do you have somebody that did that? Can you prove it? And so I'm fortunate to say here in Atlanta, because Truth and Deuce has expanded here in Atlanta, I have a testimony today. If we would, I think everybody familiar with it. Mr. Curtis, if you please would stand up and give it. Everybody give Curtis a hand. Tell us about your experience last year and how this business helped you this year. I think it's important.
Okay, I started this business in, I think it was like
We can't hear
October of last
October
2011. And when I found out, I was just a regular tax person. So, you know, she asked for some papers, and we gave them the paper. But after she really go through everything with us, she said, you know, we didn't earn enough money to get back anything much. I think when everything was summed up, get something like $355.
They got $355 from the last
yeah, and it's documented. So, you know, we are about, you know, using the right person. So I tell my wife, I mean, we got to get somebody who know about the home-based business. For this person leave a lot of money on the table. I don't know, but I just feel like something wasn't right. So this year I said, well, we got to find an expert. And Mr. Rodney and his wife was the savior in that aspect. He did our tax, we go through all the paperwork and stuff like that, and at the end of it, after everything was finished, we end up with over $7,000 and something. So that's the bottom line. You know, you might have friends that you use or company that you use previously. If they're not an expert, you're going to lose money. So the bottom line, just get someone who is a specialist and know the travel business and home-based business, and believe me, they will get everything that you deserve.
All right.
And the great thing about it is that was their expenses. I didn't have to do any magic. I didn't whip anything. I didn't bless him. I didn't do anything. I took his everyday expenses and used them properly. You see, what I want everybody to understand, there are over 475 deductions that you qualify for. But guess what the IRS do? They only give us 24 categories to put them on. And see, you say, how do you categorize over 500 deductions under 24 categories? So that's what separates the tax professional, who you can categorize the best. And see, that's why when Shanaza says her dogs, no, that's not your dogs. That's security. Because guess what? If you have a security alarm, what'll happen if an intruder comes? It'll make noise. If an intruder comes and your dog see it, what it's going to do? Make noise. Same thing. It's not, Rodney, can we get it? It's how can I get it? And see, it's important that as business owners, you qualify for everything, particularly in travel. Why travel? Anywhere you go in the world could potentially be business. You see, I want you to understand, as a travel agent, your market is the world. So if you document it properly, it's a business expense. And I want you to understand how we can move these deductions down by your everyday lifestyle, if you document it properly.
I have a question.
Just 1 second. We're going to go.
Hurry up.
As we go forward. Tax breaks. What are credits? What are credits? The first thing I want you to understand about credits is they're just meant to stimulate the economy. You see, credits are not written in stone. They don't come back every year. A lot of times you go into your tax profession and say, hey, I got more than that last year. Well, there were some credits that you qualify for that are taken away. Case in point, if you took the education credit last year, you received $2,000. Well, Obama cut it in half. If you took the education credit this year, you only got $1,000. And so when you go to your $7,000 refund last year, $6,000 refund this year, you look at your tax professional and say, hey, what are you doing different? You messing up. When there were credits that you don't qualify for anymore. And so I want people to understand how the credit works for you. But the credit is great because the credit comes directly from your tax liability. Let me give you an example. Let's say you're at the $40,000 and you owe $6,000 again. And you receive a $1,000 credit. I love asking this question. How many in our house have light bulbs? Some people have these new lights. A lot of people don't have a light bulb. Right. And how many of us understand that the going green is a movement now? Do you know they have a credits for it? Right. If you purchase a certain amount and make that space that we signify as business green, you receive a $1,000 energy efficient credit. Wow. That's $1,000. For how much the bulbs cost, if you don't mind me asking?
I'm gonna sell it, Home Depot, 4-pack for $2.97.
$2.97 a 4-pack.
Sale.
That's a nice investment for $1,000 credits. You see, just change your bulbs out. And see that part of your house, that area that we use for business, is now green. And that qualifies you for an energy efficient credit. Did your tax professional share that with you last year?
No.
Miss credit. This is information. This is our job to go find credits that can help you. And it's very important that you find the right person. Let me show you how the credit works. Let's say you owe that $6,000. The credit comes away from your liability. Not giving you a new AGI. Now your debt is $5,000. You see, $2.97. $1,000 credit. Smart business owner. Hate you missed it. That's the reality. That's the reality of it. Now, you see how credits and deductions can really lower your liability? I mean, really to the point, if you don't owe, guess what? This is all going to be added to what you used to receiving. You see, credit curves. What he said in essence was, last year I got $355. This year I got $7,500 from the same situation. Wow. This business was on his taxes last year, but he didn't get everything that he was supposed to receive. That's $7,200 difference. You think that won't help his home? From his everyday living expenses. I didn't do nothing extra. Curtis, did y'all spend gas? Yes. Did y'all have a light bill? Yes. A water bill? Yes. Mortgage interest? Yes. We'll write that off twice. And I'll show you that. But I want you to understand, credits are more valuable, true indeed. But you have to understand that they're only created to stimulate the economy. Meaning that they change year to year. But deductions are written in stone. You see, my goal is to show you how to start evolving and revolving your life around those deductions. And so that everything that you do now is in the name of business and tax deductible. And I think that's very important. But your home as a place of business, in order to deduct the expenses related to your home, this is what the IRS says. You must carry on a bona fide business. To qualify to claim the expenses using your home, there are a few things that they want you to do. One, it must be your principal place of business. Check. A place where you meet and deal with customers in the normal course of your trade. Check. And a separate structure you use in connection with the trade or business. In English, that's just the biggest room in your home. And you see, this is what we're going to use. That room, which I always say that your living room, is the biggest one, is where you will conduct business. And everything in that area is tax deductible. Let's go over this. A portion of your rent, electricity, gas, water, home, internet, cable, security, furniture, house cleaning, all of this is tax deductible. Mortgage interest, real estate taxes, insurance, rent. Do you currently have a mortgage interest?
Yes.
Yes, and guess what you do? You pay it with the bank, correct? On a 1098. And then you file it on the Schedule A. But the Schedule A only gives you pennies as opposed to the 8829. See, a lot of people don't realize you can also file it on the 8829 as well. One payment written off twice for making a smart decision. This is what we call a double deduction. Did your tax professional make you aware of that?
No.
You see, it's very important that you know about these advantages so you can take advantage. And this is not me. This is law for you. What about that vehicle? That's not your car anymore. You see, I want you to understand that's now a company vehicle.
Amen.
You see, when you really look at it, guess what? You see these people riding with the little square magnets on their car? Guess why? Those magnets pay for that car. You see, that's an advertising. And guess what? Like I always tell my wife, when you feel like being grown, you can just take them off. And that's a great thing to do. Some of us beautiful beings is like Shanaza, put the sign so we can make it a company vehicle. But when you want to step out, go ahead and take the magnets off. They're not watching. They're not watching. Go ahead and take them off and make it a Benz again. But until then, the $800 to $900 most Benzes cost a month to pay for is tax deductible.
Let them use
As long as those signs on there. Because see, that's not your car. That's a company vehicle now. And everything, the signs. I think on Vistaprint right now they have a buy one, get one free. $32, a $40 expense can make your car note tax deductible. If you just know. You see, if you just know. What's the difference between the rich, we say, what they know and what they buy. And you see, I want you to understand that. What about this? Identify your circumstances. Mileage log. Did you know business owners are earning 56 cents a mile now? You see, last year you received, if you have a job right now, I want you to understand that $40 is coming out of your check every 2 weeks, whether you like it or not. You see, they went from payroll taxes went back up from 4.2% back to 6.2%. So that's about $38.67 every 2 weeks, whether you like it or not. And the question I ask is, what is your tax strategy? What do you do to offset those taxes? You see, we make them tax deductible. You see, that's what the business owners, guess what? We were earning 55 cents last year. Now we're earning 50 cents. We got an increase, y'all got an increase in taxes. We got an increase in benefits. So it's very important that you become a business owner and keep a good mileage log. Keep good records of your miles, your gas, the repairs, the insurance, the car washes, oil changes, parking, tolls. All of this is tax deductible as a business owner and with the company vehicle. Make your car your company vehicle.
And
I
Rodney,
think it's important that we make the mileage work for you.
they got an app for that too called Trip Log.
Oh, I got a mileage bug app. Oh, it's a bunch of apps. If you're into technology, there's a few apps out there that you can just hit start in the track.
Yeah,
And when you get there, hit stop. It's done. And then it prints on Excel, you can email it to yourself and print it off, and that's documentation for your miles. Accept it. It's a great way, but you can also go to your spiral notebook and just write down start, end, total. And that's just as good. It's just as good. It's nothing fancy. If you just want to do it, they just want documentation. You see, documentation beats conversation every time with the IRS. They don't want to hear nothing from me or you. They're going to say, Rodney, can you tell your client to mail his mileage log? And if you send something crispy, you tried to back and do everything, they're going to know. But if you send something like that you've been doing all year, they're going to accept the miles. So it's important. And let me show you how. There's a thing called local transportation costs that you qualify for. And this is because of work-related travel within your tax home. What is work-related as a travel agent? Anywhere we go. You see? Anywhere we go, we're going to pass a card and share our business, correct?
Right.
So anywhere you go is work-related. So I want you to understand what your tax home is. See, this is the important part. What is your tax home? Your entire city or general area of your regular place of business. Atlanta. Everything in surrounding areas, ladies and gentlemen, tax deductible. Wow. This is your tax home. Let me give you an example. You go to work every day. You drive to work every day. This is home, this is work. Is that a Starbucks or a McDonald's somewhere close across the street from your job? A Burger King, right. Let's say this is Burger King. She said it's a Starbucks there as well. Now, if you drive from home to that Starbucks every day, you think you could stop and come in, introduce yourself, and pass out a business card? You think you could do that? Well, let me show you what this could do. You see, this is why it's very important. I want everybody to repeat this after me. Write it down.
Write it down.
You see, it's very important when you leave home, you write it down. Because if you just go to that Burger King across the street from your job and have a conversation, when you get to the Burger King, let's repeat again, write it down. When you get to the Burger King, write it down. And what I want you to understand, the mile from home to the Burger King is business miles. You see, this is the normal course. You take this trip every day anyway. Can I show you how to make some money off an everyday trip? You see, that's what I want to show you. If you turn from home to the McDonald's, your normal course in travel. See, this is the normal course in travel that I go every day as well. I stop here every day and I share my information. And then I go across the street to my job, and guess what that is? Personal. We can't write the personal miles out, but we can write the business miles. So I want the every day going to your job can pay you as a home business owner. And I want you to understand that this is legal in law. Just like you said, it's just that simple. You write destination, the business purpose, the start, the stop, and the total. And you multiply 56 cents times 60 miles, that was a great trip for work every day.
$30.
You see, and what's key is writing it down. You see, I hear people tell me that all the time. Well, I calculated it. Well, calculation is not what I needed. I need documentation of you making this trip every day. If you'll just write it down, it's yours. And that's not, when I say thousands, I mean thousands of dollars with the miles paid. And it's very important that you get that. But look at the expenses that you qualify for. Car washes, mileage, maintenance, insurance, oil changes, tires, fuel. All in all, if you'll become a self-employed business owner. You see, it's very important that you become and make that your company vehicle. You see, that's not your car. When you leave here today, Rodney wants you to understand that that's not my car. This is the company vehicle. And everything associated with it is tax deductible. What about your meals and entertainment? Skiing, hunting, fishing trips, movies. I don't do any of that but the movies. But guess what? I know people who do. And when you can offer those services tax deductible, if you entertain those, isn't as a travel agent, don't I need to get the experience before I refer it to you? And see, that makes mine business related. So when I go to the movies, I have to go get the experience. I have to eat the popcorn. I have to do everything that I think you may do in order for me to refer. But guess what mine is? Tax deductible. In the name of what? Business. And that's what I want you to understand. In the name of business is what I want you to understand. Oh, it's Atlanta weather. Oh, I love it. Your meals and your entertainment, all of this in the realm of business should create two things. This is what the IRS say. One of the three things they want when you write off your meals and entertainment. They want to make sure that it generates business. It creates a goodwill or thank employees for a job well done. I'm going to just ask you, sir, who's going to be your first employee in your company? Of course. You think you can thank yourself for a job well done? And write off the meal, and write off the night. And you see, there go your second employee. You think you can thank your employee for a job well done and make it tax deductible? All of us can. And see, this is what I want you to understand. You will be your first employee, making yourself and everything you do tax deductible, legally. And see, that's very important. Here's the two tests that they say, either a directly related test